Which one?
No, I'm saying none are
Oh,
open. We're good. All right, we're live. A minute late, but that gave us hopefully some time to people join us today. The stock market is looking like it's opening slightly higher today. A little year-end melt up. Maybe everybody's in the holiday spirit. We have a little bit of a shortened week with Thanksgiving falling on this week. But George, if you just want to do your little opener and say what you're seeing in the market and what's going on today in the stock market.
yeah. I'm just going to quickly send out a link saying we're live now. Um, uh, okay. Sorry, guys. I know we've been all over the place recently. Okay, we're starting. I am looking. I want to just get my update on the latest. I mean, it's been a pretty strong open, but we have been expecting bullishness. So that's pretty much exactly where we are. Tesla's a little further down than I thought. Um, but yeah, um, we've definitely seen a good, strong open today. Tech has continued to do well. I'm just going to take a look at the latest and greatest in Prospero in terms of the option sentiments, and then I'm going to give more extended comments. SPY has been lagging a little bit on this stuff. But it's back up. Yeah, things are looking pretty bullish. And we can talk about like exactly like what we're seeing on that stuff in terms of it being bullish, which is that you know, we've seen kind of like some of our macro concerns, especially with the decision that the interest rate cuts or the interest rate raises look like they're over, and like now there's a dominant probability. It was as high as 60% or 62%, and let's check today if it's even higher that we're going to get a cut in the May meeting. Let's just get the updated number. Yeah. Oh no. Yeah, we went down a little bit. We're at 59%. So we've been a little up and down there, but yeah, the bear story is on the macro side is definitely shrinking. But we still took a cautiously optimistic, bullish read. We have only two two bull picks and one bear pick this week. Meta and Eli Lilly are our bulls. And then we had, I believe, LX. I haven't memorized it. I think it's LXP. LXP as our bear. But we did something we hadn't done. And we've been talking about this a little bit, where we added IWM as a bull pick. Because I think for the foreseeable future, in the bull story that we're now seeing to form more and more, in that story, I do think IWM will beat SPY, QQQ, and the Dow. Now, and that's just because, smaller cap stocks, growth stocks have really been hammered. And I do see in an environment where we are going bullish, IWM, I expect over the next year to absolutely outperform all of those indexes in that story. Now, if we have to shift more bearish again, we will. But I would say in the bull story that we're now forming, I really like IWM. And that's why for the first time we added it as an index as a bull pick.
That's interesting that you say that, because I've been wondering that for a while now. Like, how long can these small cap stocks underperform before they're just, so much of a value there that? But it was really just the market conditions that had to line up for them to become the value, I guess, is what you're saying.
Yeah, growth stocks have been getting beat up, and for good reason. Growth stocks get like, in the extended bull run that we had, up until this bear run started, that's going to be the story of growth stocks being more and more overvalued. That's just what happens, right? So they have a lot to come down. They have a lot to come down in that situation. Now, if the story is like what we think it is and what we're guiding to, we're not ready to go like all in on growth stocks yet, which is why we're basically looking at profitability plus growth still. And for the first time, we actually shifted our filters or our screeners in the newsletter to profitability plus growth instead of just profitability. So we still want to look at the combo. we still guide any of our users, if they're going to go long, to have profitability plus growth be above 100 and preferably above 120. That's just the highest hit rate on our stocks. If you have the following conditions: upside breakout is greater than 30 over downside breakout, and then profitability plus growth is over 120. We just see a lot of success in those setups. Now, in addition to that, you can also look at the flip side for bears, but like for the foreseeable future, we're really not recommending a strong bear portfolio, which is obviously very different than we have. I've been joking in the last two letters that it takes me a long time to put my bear goggles away, but they're starting to go back on the shelf. So yes, if you are going to do bears, especially in this environment, we would actually recommend profitability plus growth being below 60 and downside breakout being 30 above upside breakout. Those are kind of like, if you use those rules in combination, we see a very, very high success rate for our picks historically.
That's awesome. And we got a comment: Lazy Sundays tuning in from Florida. Thanks for tuning in. You probably have much nicer weather than we have today. Hope you enjoy the stream. But George, we got to get into this Sam Altman, OpenAI, Microsoft saga, drama, whole situation that played out over the weekend. So on Friday, so for people who don't know, Sam Altman is the CEO, or was the CEO of OpenAI, a company that's valued at $86 billion. And Microsoft has a investment interest in them and uses a lot of their services with Microsoft. He got fired on Friday by the board of OpenAI, which shocked the investment world. And over the weekend, the OpenAI team basically revolted against the decision, and they threatened to basically quit and leave OpenAI unless they were gonna. They gave the OpenAI board an ultimatum to hire Sam Altman back on Sunday, which wound up not happening. He's actually joining Microsoft under a new AI branch of Microsoft. Him and his basically his number two man, Greg Brockman, are now part of Microsoft. So can you just explain the shakeup that we saw over the weekend and what it means for the financial world, the AI world, all of it?
Wow, I've actually I've gone all over the place on this on the basic, like, what's going on here at a higher level, which is this. Was this discord created because Sam Altman wanted to be too ethical, or he wanted to be kind of more unethical and profit seeking? And I've gone all over the place in this. It started out with the news first breaking and me being like, you know what, I have no idea, because you don't know. Like, on the one hand, there's a lot of parts of this Sam Altman story that's very interesting. He did take no salary to start. He is a Y Combinator guy, and like, I feel like anyone that's like very much in, like, the startup, especially like investor scene, like, they have a natural inclination to monetize. So right there, I just kind of expect it to be more of kind of the profit seeking expectation. Now, on the other hand, if it was that, and not maybe something bigger where maybe it was more complicated, the issue, I'm not sure all of these people would want to follow him out, especially in light of the facts as they're going to unfold. When I saw that Microsoft has immediately hired him and they're poaching a lot of people from there, I actually have more of the belief that I went back to, like, oh, like, it's just profit seeking. If Microsoft poached him up right away, like, we're talking about a profit seeking situation. But I actually was talking to someone that's actually been on this stream, James, who's been in AI for a long time as well. And he actually informed me that the deal that Microsoft and OpenAI have is that basically Microsoft gets more, control and more like kind of free access to the tech, and not like, as it is now, where they're kind of behind whatever the best OpenAI tech is. If OpenAI doesn't hit certain delivery requirements, right? So to me, we actually start to go back to, well, maybe they were trying to be more ethical, and maybe Sam Altman was trying to be more ethical, because there is a part of this story where if if a lot of uh, OpenAI people are being poached and going into Microsoft, that's going to create more chaos and actually getting them making it harder for OpenAI to hit those requirements. So actually, when you look at the person that is now brought in on the CEO, it looked like it might have been um it looked like it might have been um like it's the ex-CEO of Twitch, who's not really as technically strong as some of the other people that left, and who obviously is very good, like, famously good at like kind of monetizing Twitch. And I would say, especially, like, for lack of a better word, sending them down kind of like a pornographic route. Which, like, the first thing I have to say is, like, I have started to see some competitors in the space that have kind of like, they want to create what you might call like sexier chats with like celebrities. I've started to see that come in. So we could start seeing OpenAI more in like the go maybe create more products in like what you might call the sexual companion space. Um, which, of course, that's where, like, I think a lot of this is going. And a lot of the times you kind of like talk about like where the technology is going, and people in the AI space like wonder how long until there's just like straight up like AI companions for people. Um, but that's all to say, actually, the more I'm learning about this and the more I dig into the potential conspiracy, this could be uh this could be a way to just get kind of the training wheels taken off what goes from OpenAI into Microsoft. Because if this chaos, if this leadership change causes OpenAI to not hit their delivery requirements to Microsoft, that essentially gives them Microsoft more control, more freedom. So all of this adds up to, like, maybe it isn't actually about Sam Altman or like what he was doing or how ethical he was or his team around him was, but maybe this is Sequoia, other people that invested in OpenAI and have a vested interest in this deal, wanting it to become a more profit generating entity for um, for OpenAI, for their investment. And Sam Altman and these senior AI people at OpenAI are just kind of a casualty of that.
Ooh, there's so much to break down here. So for what you're saying is that because OpenAI AI started as a nonprofit, and there's so much like legal troubles with like how much profit they could make. Like I was seeing something that investors of OpenAI have a cap to how much they can gain on their investment. Even though I think it was pretty high, I think it was like 100x or something. It was really high, but there was a cap. So that the conspiracy is that they're doing all of this shifting of power and kind of destroying OpenAI so that Microsoft can absorb it and like get all of that upside that's uncapped then for Microsoft.
I think destroying is strong. Basically, like, the deal, as I understand it, and this is mostly coming secondhand for James, so I didn't do one of my number one rules with its primary source, but I trust James as a source. I'm just giving this the caveat. Basically, like, they have to hit certain delivery feature requirements to, basically, as it exists now, Microsoft can only use kind of their older tech, and their research, kind of funnels things to Microsoft. But Microsoft has more access. Microsoft has more ability to have access to whatever their current tech and to monetize it in whatever way they want. Um, if if uh, OpenAI doesn't hit those deliveries. So, if it's like destroying is strong, but it might be some at least light sabotage to not let them hit their requirements. Um, 1 second. Sorry, you can feed me the next question. My dog is sick and I need to
Yeah,
coordinate some veterinary things.
no problem. Hopefully your pup feels better soon. It seems like a really dirty game that Microsoft is playing, and maybe they're just kind of part of it as well. But I was looking back and I saw that as recently as 2018, Google was actually bigger than Microsoft in market cap. But going fast forwarding to today, where Microsoft is thought of as the leader in AI and Google is a secondary, and Microsoft is over $1 trillion more valuable in market cap than Google. Um, like, what do you think Microsoft has gotten the most right? Why are financial markets rewarding them so much more over Google?
Well, I think the way we look at this, and I think you had some numbers that I maybe will have you throw in as we talk about this. Um, but I think the way that I look at it, and we kind of talk about, people know that I like Google, I like their brain, I like DeepMind, which, when I talk about like AI warnings and like all of this general concern, something that we always have to emphasize is that Jeffrey Hinton, like kind of one of the what is called like the father of AI, um, he started, he was the CEO of DeepMind. He went into Google and he recently left because he's afraid of AI. And I don't think anyone could ever say that fact enough. But the bottom line is DeepMind, the brain that they created, I still think like outside of the Chinese Communist Party, they probably have what I would think as of the best AI. Maybe even better than the US government in terms of the actual brain, whether that's true or not. But they rank very high. Mu0, DeepMind, inside Google's AI. So when we talk about pure tech, we get more excited about that. However, Google's kind of got one of the same things going on that we talk about with like NVIDIA all the time, which is just that like Google's search business, like, basically like the one of the biggest monopolies we've actually seen in this country ever. Um, Google search business is so dependent on AI. And like one of the things that it does that's like very interesting from the start is like about 20% of the searches that you go through aren't Google's proven best algorithm. It's variations on their best algorithms or set of algorithms that they're testing to see if they should replace that one. So there is a lot of AI embedded in the optimized search product that you get. So any kind of threat to a loss of superiority there, just like we talk about with NVIDIA, is very concerning for their business. And that's why I think they're ultimately being priced below Microsoft, because there's a lot of unknowns in terms of like the total value of the company, because there's a lot of unknowns in what you might call their core business and how they can retain it. Meanwhile, Microsoft has this upside. Again, I wouldn't put them in the same class as Google yet in terms of that brain yet. But at the same time, what we're talking about there is that Microsoft has their core product is much less under threat. And they've had it for like what, like 3 or 4 decades? No, not like 3 decades now. The Office products, like, Windows 96 was the first big one. I don't know if that even came out in 96 though. But anyway, basically they've had this forever. And I think you have some numbers on what that looks like in terms of like how it's grown in that core business, not shrank, right?
Yeah, so it's crazy that you say that, their core business has been around for 3 decades. You'd think it'd be hard to grow it at this point. But since 2018, productivity revenue, which should encapsulate like all of their business-oriented services that they provide, went from 35.8 billion in 2018 to 69.2 billion in the past year. So that's basically a double. And their intelligent cloud from 2018 went from 32.2 billion to 87.9 billion, and that's a newer business, but that almost tripled. So they're growing like crazy even after all this time.
Yeah. I mean, that's the thing. That core business just keeps on chugging along. And anything that it does in AI is just a bonus. So I think that that's why we look at I still would rather own Google than Microsoft, to be clear, just because I think Google is a better core innovator, as we've talked about, in terms of their ability to create their own products. And Google acquires, Google does everything, but like we could go through the stories all day long, and we have about how Google actually has had, many more recent innovations than Microsoft. And Google Cloud was built off a product that we talk about all the time. It was called Dremel, their internal database that basically was a distributed database that basically Amazon and Azure copied later, called BigQuery. But it existed as Dremel. It was a research product of theirs to run their significant database operations for a long time. So when we talk about liking Google more as an innovator, it's things like that, which is why we bet on them more long term than Microsoft. That being said, I think that there's also more risk to their business than Microsoft because they don't have that core business that we're talking about. That is these, office products, the productivity products, how they integrate, things into the cloud. Like I actually really like that how they, kind of did the how they kind of did looped in not only OpenAI and ChatGPT, but also what they did with the GitHub acquisition and Copilot, which is which really integrates well with ChatGPT in terms of like being able to create these like automated code bases and assists. So I actually really like what they're doing with some of their acquisitions in addition to their core business. So I see that story. I just prefer Google as an innovator long term. Um, but that being said, it is a very interesting story if this develops and they can get kind of like a more unlocked OpenAI product, ChatGPT. That could be an interesting part of their story for sure.
Do you think Satya Nadella deserves a bit more? I guess he gets credit, but just like a bit more, I don't know, news coverage about the success he's had because, you always hear about Mark Zuckerberg, Elon Musk, all the other Magnificent Seven, Jensen Huang, all the other Magnificent Seven CEOs. I feel like Satya Nadella is kind of just in the background, just like doing the best job out of all of them almost.
Um, you might say, yeah. I mean, I think it's hard. Like, it's hard to, I, it's hard to like. I would say he's doing better than Wong or Musk, just because I think they're doing innovation better, and I think the story of how their companies are valued, like at 2024 PEs, like almost double, forward PEs, double Microsoft. I think that tells the story of like management that is doing better at growing and the market is more confident. And I think that tells that story right there. Um, but I definitely think relative to like the rest of the big seven CEOs, he deserves to be in that conversation right there with them. I think like, we talk about it all the time. I think the fact that he's doing so much acquisition and there's not as much, in-house R&D that is going on, I think the CEOs that are idolized tend to do a better job of that. And the fact that he hasn't done a great job of that is probably like why he's not like idolized. But like I put him very similar to Mark Zuckerberg in that like Zuckerberg does very good with acquisitions, but like to your point, I would say Nadella has had less missteps in his time as a CEO, and maybe that's why the market likes him more than say Zuckerberg or whoever the hell is running Google, which is which is always very unclear. Like there always seems to be. I mean, it's they have a CEO, but the extent that is like Page and Brin or like the rest of the board is involved, like it's always very murky, and you never really know how far. Like obviously, Sundar has been there for a little bit now, but like their history, like you never know when it's going to be like if Schmidt will come back or Brin or like anyone's just like fed up with the direction and they're going to come back in because that's been their history. And I think like if we're talking about why they're valued less than Microsoft, especially as like I think a lot of people that know tech really well would kind of agree that their pure tech is better, but they're just not as good at monetizing. Um, but yeah, I would say that like that is that's highly relevant in terms of how you evaluate that. But yeah, the moral of the story is like I do think Nadella is underrated relative. Like I think he's definitely doing a better job than Tim Cook. I think like if you're talking about like the lack of missteps, I would say he's doing a better job um, than Zuckerberg since he's taken over. I think he's probably doing a better job. Where we got Wong and without a doubt doing a better job than Jassy, who's like probably like him and Cook are bringing up the rear, but like as we know, it's probably really not Jassy running it, and like I think there's probably like a bit of a power struggle between the board and like what Bezos obviously like we've talked about. I can't see Bezos still not having opinions on how to run the company. So like I think we probably got a similar situation at Amazon that we have at Google where there's just a lot of cooks in that kitchen. But like yeah, I mean we've just kind of talked our way into like I think him as kind of like since he's taken over probably being the third best, like what I would say the third best CEO in the Magnificent Seven, in my opinion.
Yeah. And so speaking of Jassy and Amazon, they just announced today that they want to give people free AI training as they up their AI jobs that they offer. And they want to give 2 million people by 2025 the free training. And so there's kind of been two schools of thought of where AI is going to take people's jobs, but AI is also going to create people's jobs. So I was wondering, like, maybe where do you fall on that balance of what AI is going to do to the workforce, and if this is good for Amazon?
Well, first things first, I think like some smart AI people make this point all the time in terms of the doom and gloom. Like obviously I mentioned Hinton, people should be like scared of like and not ignoring the potential downsides of AI. That's my disclaimer to start. That being said, AI people that I really respect, this is not even my point. I just heard them made the point, and I'm just like, oh, that's a really good point. Like everybody said, like, oh, industrial revolution, like all the way back there, nobody's gonna have jobs anymore. Everything's gonna be reproduced. The story is that old and, maybe even older. That's just like the first example that I lean on of like some kind of new technology coming along and everybody saying like, well, there's going to be no more jobs anymore. So I do think that like your point on this is the natural evolution of, people will just learn to be trained in different jobs. And I commend Amazon for leading the way on that because I do think they're obviously someone that's creating a lot of, problems in workers' rights and, eventual like job elimination, hello, like drone delivery and stuff like that. But the fact that they're actually like doing something to solve the problem too, I really respect that. And even if it's just a story, I still respect when people like actually do things, even if it is just virtue signaling, that they're actually trying to make an impact. Um, and then I would say like, yeah, the other thing is the one thing I'm not sure about is like whether or not we actually live in a place where people are willing to roll up their sleeves and learn new jobs, learn new skills, or there won't be enough people to take on those new jobs. Because I think one of the problems with our political system as it is people seem very comfortable, no matter which party they're in, just blaming the other political party, blaming these circumstances for whatever. And I am a little concerned that there could be these new job training opportunities. There could actually be real good jobs available for people that maybe would only even have to take a few weeks, a few months of retraining to get into a much higher position. And they'd really just like rather complain or, for other reasons, things like, these addiction problems that we have, that I don't necessarily fully blame people for, but they have to take some responsibility for as well. I'm of the belief that like, society, beats you down and gives you lack of hope to a certain point. And, some of these people don't have a lot of places to turn. So I don't necessarily blame them for that, but it is just a realistic outcome that I do have to say is the caveat to these other, parts of society, like other times in history where we've seen like automations, improvements come along where people like eventually learn the new job skills to be so like to be in line with these new automations. But yes, I do worry about the path of society that just like we have far too many people kind of just like being more willing to complain and blame the other political party or, the classic historical example of blaming immigrants for their problems, which that story is as old as time. But yes, I don't really dig the idea of blaming immigrants if there's jobs available for people that they don't retrain for.
Yeah, that what you're saying is kind of reminding me of, I remember, I think a year or so ago, there was a thing on social media where everybody was saying learn to code. I forget why it came up, but they were saying like how these jobs are going to be replaced, and they were like, oh, well, learn to code. And it was kind of a dig at people. Um, One thing I did want to say, based off what you're saying, and kind of the historic time we're living in, do you think in the future, 20, 50 years from now, like in the history books, we'll be living through the AI revolution right now?
I mean, I don't know about like if it's a revolution, it's going to be a slow one. Like I see like revolutions as kind of things that generally like take place faster, and I think we've kind of like been in an AI revolution. Um, an extended revolution for a while, and will continue. But like, yeah, I do think that like this is definitely the start, where it may have been a more silent revolution for a while. We're now in like the phase of like it's just like no, I consider this maybe the start of like the period of time where like we're talking about there's enough awareness that like instead of being victims later, people should start being prepared for the new jobs, the new world, the new retraining. Um, I would say is my really important thing there, where I think we have enough data now where I think we have enough data now where people should really be looking at that. Where it's just like, okay, you could say like the revolution is here in that people absolutely should be looking at how they evaluate their jobs and their skills, lest they not be in a bad position later. Um, but yeah, I think like as a student of AI history, like people thought the AI revolution was in the 80s. People thought like maybe like it was going to happen like maybe not AI, but like, maybe the 2000s as like the tech revolution, where there started to be like a lot, more and more interesting machine learning applications coming out after that, the tech bubble. But yeah, I would say that if it helps people to think of this as the tech revolution now, in terms of, or the AI revolution now, in terms of like wake up and start preparing for your job to change or you to know new skills, like, yes, you are on notice. It is that kind of revolution.
Mhm. Yeah, it's like these magnificent seven stocks in AI. It's like all the market cares about because there's such a big percentage of the market now. But I wanted to ask you, like, they've performed so well throughout 2023. Can they possibly follow it up in 2024? I think your kind of opening segment where you said you expect IWM to do well kind of gives your answer, but maybe you could speak more about it.
Yeah, and I mean, there's things in the IWM that are like smaller tech companies, like the IWM. I look at the exposure to that more as like, the S&P 500 is about profitability, and the QQQ is more about profitability plus growth, which is why we tend to like a lot of QQQ type stocks. Um, and where the S&P is more about profitability, the IWM is more about growth. And I think we are starting to see a time where growth is going to be a bigger deal. Um, so I think that that's like the one thing, and like I wouldn't consider it like one or the other, but like I think the important thing, yes, I'm still bullish on like I think like I would rather own the Magnificent Seven, or I might call it like I might cut uh I might cut Apple and Amazon out of that. Maybe not both. Let's cut Apple out. Let's call it the Magnificent Six. No, never mind. Buy the whole seven. Like it does diversify a little bit. You do have more hardware exposure there, hardware diversification. And I would say, I believe the last 10 years it's like over 2,000% performance, the Magnificent Seven, something crazy like that, right? Do I think it will perform at 2,000% again? Maybe, maybe not. Do I think it's a better bet to own those stocks for the next 10 years versus the S&P 500? 1,000%.
Interesting. And you said, saying or building off the fact that these stocks have been up 2,000% or so in the past years. The famous short seller Jim Chanos, who in 2008 had $6 billion under management, just closed his hedge fund. He's turning it into a family office now. He was down to $200 million under management today. So, do you think it's possible to be a successful long-term short seller in the market, or are you just fighting, the flow of how things go in the stock market if you're going to try to be like that?
I think that the great thing that like we've talked about like the problems with the meme stock revolution, including like how some retail investors I saw become more greedy than hedge funds in terms of like when they were willing to take profits slash like pressure the rest of their cult to not like actually take what would have been like real life changing wealth for them to hold on for like what they called life changing wealth, which was like 10 times that. But it has, I would say, probably like until further notice, had short sellers running scared. And I will tell you like this really, really hard part of like Right now for our longs and our shorts, we filter out short pressure above 70 just because I don't want to deal with it one way or the other. And I'll give you kind of like, I always think taking examples to the extremes is a really good way to look at it. Like, let's say you're a short seller and you got something, you're succeeding, like your borrow rate is going up, you're basically paying more and more in terms of shorting, it's getting close to bankruptcy. Like, while you're doing that, you're also creating a lot of variables that these short squeeze people are looking for. So, like, are you really close to getting like your bankruptcy victory, or are you also really close to hitting a critical mass where retail like sneaks up on you and a company like AMC or GME should have gone bankrupt? You should have been right, but you weren't, because you basically created a very attractive situation for these short squeeze people to pile in. So, like, when do you pull the plug as a short seller? You could be right. That is like too hard of a variable right now. Like, maybe you don't want to short to the end. Maybe you only want to short to a certain point. But that's certainly how I look at it in my short positions, where I'm just like, nope. For me, the closer you get to like victory or bankruptcy or whatever, that's like I'm out. I'm out if you're above the 70th percentile in our short pressure rating, because that just becomes too risky for me. And I just think, like, as a short seller, like, if that's your bread and butter, when you pull the plug, that's a really difficult thing. And like, I don't even know how many shorts I'll even have um when the market goes like even more bullish than this. Right now I'm 2-1, 3-1 if you consider my IWM position. But yeah, it's definitely hard to figure out right now in like an unenviable position. And like, yeah, for the foreseeable future, I would say that I don't love like shorting, especially like as shorting starts to get more successful and closer to zero. That's a minefield.
So why has that dynamic that you're talking about of like the worse off a company basically is, the more chance that, retail are going to try and short squeeze it? Like, is that started because of social media? And do you remember a time in the stock market where it wasn't like that and companies would literally just go down to zero because they were in such a bad situation?
Well, I think some of it, like, some short selling is like predatory, right? But some of it is just like, and we talk about this with Buffett, where he'd be like the executioner, like if he started shorting it because everybody would pile on. But some of it is just like your company isn't viable and you don't have a good financial position and you become an attractive short bet because your company isn't good. And that, I think, is very reasonable. As long as you're not just like what I think some people took issue with in the GameStop thing, basically like putting a company out of business by shorting them so much, maybe accelerating that timeline. I don't think there's anything inherently wrong with that. But what you end up getting in these situations, and what we saw, and like, by the way, retail didn't invent short squeezes. This is like, short squeezes are very interesting, and I'll say a little about the mechanics. Basically, like, a short is it's a loan, right? So if you short a stock for $10, you are actually borrowing $10 and agreeing to pay back that $10, and let's say like at a 10% interest rate. That would be your short borrow fee, right? So if you shorted the stock for a year and it went down to $9, you'd actually be at break even because it cost you 10% to have that short. If it went to or sorry, you would be even. But if it went to $11, you would actually be at a $2 loss, because that $1 loss, you'd owe $11 plus 10% interest, that dollar, right? So that's the mechanics. Now, as stocks get more and more heavily shorted, the demand for those shorts increases, right? So that short borrow rate goes up, because the people that, like, just so you know, when you own shares of stock, you can loan them out to be short. That's where that loan agreement comes from. So the people that own those shares, as demand for it goes up, as the stock starts to go down, they can start pitting bidders against each other and say, you know what? I don't want a 10% interest rate. I actually want a 100% interest rate, because we all know that this company is in bad shape, right? So that starts to increase. But what ends up happening, if you as a borrower, and this is public information, know that the average borrow rate is now 100%, you're saying to yourself, well, if we can create enough momentum behind this, we can start buying this. And that short position is going to get at 100% interest rate, is going to get very expensive to hold. And that's like a very easy concept that obviously a lot of retail investors can understand. And I think the thing that people don't necessarily know about it that I think is kind of funny um, is that um, basically um, hedge funds do this all the time. And BlackRock cleared what I was told was $1 billion on GameStop. Um, and basically, like, not only were they loaning the shares out at higher and higher rates, what ends up happening, you have a few mechanisms. BlackRock can also start buying more shares because they know they can loan them out at high rates. But the best way to cause a short squeeze, and I don't know this factually or the timeline, I just know the general numbers about what they made on the trade. Um, but a place like BlackRock, when they loan you their shares, they at any time can say, actually, I want my shares back. It depends on your agreement, but like generally, there's nothing stopping them from saying, actually, I want those shares back. I want to stop loaning. I'm calling the debt. Now, sometimes they can just have certain margin requirements where basically they might not be able to call the debt back, but they're like, you know what, I loaned you this for 10% of your position as collateral, but I'm allowed to request 30% as collateral because this is now a hard to borrow stock. There's mechanisms that could just actually apply more pressure to the people shorting that you as a large owner of the stock like BlackRock, which, you go and look at BlackRock, they probably own like 10% of almost any stock. It's scary how much you go and look at how much BlackRock actually owns. So they do control a lot of this kind of stuff. Um, so, uh, so yes, I actually think that those mechanisms are very important for everybody to understand. And like what ends up happening is if it gets enough retail, what I call like retail fervor for this stuff, it becomes very attractive for the institutions to pile in and be part of that because that's easy money. When like BlackRock sees all like retail on their own driving up the price of GameStop or retail on their own driving up the price of AMC, it's like they're licking their chops. They're just like, oh, I bet if we start applying some pressure to this situation, maybe getting some of our friends involved, start doing more of this, that's going to be very attractive profit for us. We're going to force these shorts to cover. We're going to do more to make sure they're covered. And oh, by the way, when we increase the momentum, that many more retail is going to pile in, that many more institutions are going to pile in, and you basically create a situation like we saw there. Which, yeah, I don't blame short sellers for being fearful of that. There's nothing stopping any heavily shorted stock with a high borrow rate from becoming that story.
Yeah, that's fascinating to learn the ins and outs of how that's actually happening. But we got a comment from Haley Brown. She's saying that on TikTok, they're saying the car market is going to crash. People aren't paying their loans and dealers have too much inventory. So, what does that mean for the market?
Yes. Well, that means that uh, we are seeing that consumer credit crisis that we started talking about forming. Um, Especially like that is a big sign of economic trouble. We've talked about it. Like generally people's cars are the last thing they want to default on and do default on because like a lot of people's cars are how they get to their jobs. So they're either out of a job or they're in a very difficult situation, maybe a lot of credit card debt that is causing them to not pay their loans. So yeah, like I would say what that means for a market is what we're talking about. I would start staying away from, retail based stocks. I would be very, very concerned about. I would be concerned at like other consumption things. Even something like, anything around this holiday season, there might be less spending. I would even be concerned about some of like the utilities, people cutting back on that kind of thing, typically what they do, or even things like, if there's car troubles, there could be fuel could be less people buying fuel or less of a budget for that, going less distance. Anything that touches consumers And then after that, things that touch like consumer finance, especially if we see like, I think right now some of the defaults could be recovered from in terms of like these higher interest rates. But if interest rates start being cut as defaults rise, I think that's when we're starting to worry about like consumer finance companies as well, finance companies more broadly. But yeah, I would say more consumer finance companies. But in that order, I would look for things like I would look for concern over anything that touches retail spending, holiday spending, then look at like utilities, gas, things like that, that people just like might cut back on along with cars. And then consumer finance things would be the things that I would mean in terms of like what that means for the market.
So yeah,
Are you good on your answer, Haley?
yeah, we'll see if she responds, but it'll be interesting to see how the Black Friday like statistics come in probably in a few weeks and how that's playing out with the consumer. I have another story that's kind of related to Thanksgiving. I was reading an article about how they were saying that Ozempic might actually curb the spending for Thanksgiving food items this year. For people who don't know, Ozempic is like a diabetes and weight loss drug. It's becoming very popular, obviously, because anything that makes you lose weight, people are gonna want to spend on. But uh, what do you make of this story? Is it just a fun little story?
Um, well, first of all, I think that it's pretty funny that we have these like, I mean, where I stand on like weight loss drugs is like I think it would be great if we were like healthier as a country and we didn't need that. But also like we need more preventative care, and anyone that works for and that could live a healthier lifestyle with a pill, like I'm all for it. Now, one of our favorite stocks, Eli Lilly, that was actually one of our two bulls, has like something that could be a competing drug for Ozempic called Madura. And I think you looked up some stats on the industry for that, right?
Yes. So right now, Ozempic is the leader of all the weight loss drugs, and Ozempic in like a shot form is called Wegovy. So those statistics are combined, but they're doing 12.5 billion this year, and then Eli Lilly, which has two drugs, so they have Trulicity, which is on the market now, which is doing $8 billion this year. So it's a legit competitor to Ozempic already, but they have another drug, Monjuro, that you just mentioned, that got approved very recently for weight loss treatment and type 2 diabetes treatment. And the weight loss market in total of like pharmaceutical market is supposed to explode over the next like decade or so. Through 2035, it's expected to hit 100 billion in annual sales. So I don't know. Seems like a pretty big growth market for these companies.
Yeah, I mean, weight loss has been a problem forever, right? If these things actually work, I mean that's a huge win for both like these companies and everybody. And unlike a lot of pharmaceutical stuff, like I think you could actually say is doing a lot of good. Um, but but yeah, I mean I think that like that's massive growth, and I think that's like obviously forecasting things that if they're actually like have efficacy, um, would be really, really strong. But like, yeah, I think Eli Lilly is a really exciting company for that reason. I mean, they have a lot of interesting growth drugs. They've done really well. We've been recommending them for a long time. They don't really sound like a healthcare company. Maybe that works. Maybe that works well for them. I do want to just get an update on their 2024 P because I can't remember. Um, I can't remember where it stood, but I do think it looked yeah, it was pretty high. It is trading at like a 46 81 2024 PE, but that's just like actually an interesting quick lesson on like PEs because like, you know, biotech companies or drug companies or anything like biotech drug overlap, they're some of the hardest ones to predict. And we got burned last week on TXG in our letter. And that was actually just like a really basic error that I made going short of biotech stock going into earnings. I don't know what I was thinking on that one. But biotech are just like tricky in general. Um, and but like, yeah, you see like Eli Lilly is actually like it's valued closer to like Tesla and Nvidia than it is like Meta and Google and like about like halfway through Microsoft and Tesla or Nvidia. Um, and it's very interesting because, like, yeah, you actually do have very good profit centers for, a lot of these drugs. They're pretty reliable. But, new drugs, when you look at something like in a growing industry, like kind of unproven, doesn't necessarily have the big market, but there's a big, exciting market. Like, yeah, those are priced, those kind of get priced into the company closer to like traditional tech than they do, um, like, even like ad growth businesses like, Meta or Google.
Yeah, so I was just reading the article again, and I'm wondering now, are these food companies that are based off the poor American diet, McDonald's, and then all the snack companies, Mars, and all of those. In the article, it says that 100 million adults and 15 million children are considered obese. So even if you have, whatever percentage you want to put on it, 10, 20, 50, of these people changing their lifestyles or changing their habits, would that impact these food companies going forward?
Maybe, yeah, like who know, like, I mean, yeah, it would. Like, I'm trying to think of like how much, like, they curb your appetite, you're gonna see less sales from that, probably, right? Um, but yeah, I'm even thinking about it in terms of like, you know, maybe there's like a partnership where you get a little Ozempic with your Happy Meal, with your Happy Meal. Like, who knows? Who knows? Or maybe they just like pipe it into the fountain drinks or something like that. That's an interesting like future partnership. Um, like, yeah, that's how they would make up on their lower food margins. They like get cut in on the on the drugs, maybe get a little of that like sweet like healthcare subsidy. Um, I wish I was completely joking when I said that. I could actually see that happening. Like, it's not like it's a little ridiculous, but not completely out of the question. Um, but yeah, I mean, I think that like all of these consumption based businesses like that survive on obesity, I hope they have long term profit problems. Otherwise, like the country is going to have long term profit problems. And like a lot of, I think the fact that like, pretty much any doctor that you'll ever talk to just like has the same issue with our healthcare system, actually beyond the costs, but it's just that like the care isn't preventative. And it's all just like we wait until people are sick or maybe even beyond sick before they even like show up and start to get help. Um, so I think any of this preventative stuff is both going to like interfere with companies that like profit off obesity, like, you know, pretty much any fast food place. Um, but you also just never know. You also never know, like, how these places adjust. Like, they could go with smaller portions and the same prices, because people just have lower appetites, but like they still need to eat. You know, I don't know really how it's gonna come out in the wash, or maybe like I also just like as a joke about the future, like we all like in any like futurism. I'm very into futurism, which is just basically like it's kind of like science fiction combined with like science. So it's like you do base it a little bit more on like, actual technologies and like the path of it. And there's a lot of jokes about like, just like how like like our uniqueness around clothing and our uniqueness around things like food are just going to go away. And like, yes, I could also see someday where Amazon just like sends you your little food cubes, and like that's what you eat. They show up at your, the drones bring you them, every morning or every week, and you like eat your cube. And yeah, we buy everything from Amazon. They like there's also jokes about like we just get like injections that make us live longer. So like, yeah, I could see a future where like there is no McDonald's because your little like Amazon drone just like flies into your house, gives you an injection, and feeds you your food cube, and then goes on to the next house.
I hope not. That doesn't sound too fun to me. Hopefully, that's a long way in the future.
It might be all certain people can afford. Like, like, hey, you don't have a job, but the government pays, $9.99 a day for Amazon to like show up and make sure you have the nutrients to survive.
Is that a George Orwell's 1984 coming to life?
Yeah, yeah, yeah. I mean, it's a lot of. I mean, like I said, a lot of different people have these ideas. Um, there's actually a really lesser known book that called We that is like actually like it's not as popular because it's like the Russian version of 1984, but obviously they're more totalitarian. So like actually like more on their way to 1984 were now they're just kind of like weird and chaotic and what Putin says. Not necessarily all that organized. Um, but yeah, which is why they're a really bad example because like an example of like a good, well-run, like totalitarian state like that is like something that's just like very predictable and like running like a machine. And like the leader starting like random wars because I don't know, pride or boredom, maybe a little of both, doesn't really fit in with like the organized totalitarian. So that's why I'm like saying like what Russia was. But in We, like you were always being watched, and like you actually had to like get permission from the government to have sex. I think maybe procreate, maybe just have sex generally. I don't actually remember, but I do remember that like that. And then also like your windows had to be open. So I think like the government or the cameras kind of like had to be like watching you all time, maybe to make sure that you like followed through on your appointment. Um, but yeah, like these ideas are all like the extension. They're all actually kind of like um Marxist ideas, and Marx drew from earlier philosophies, but it's all just like the path of capitalism. Um, and like yeah, actually like Marx wrote a lot like obviously there's like Leninism, which is like kind of like his idea of communism that had never really been we've never really seen because Marx's idea of communism was actually like the middle class like rising up, and most of like what we've seen is actually not necessarily like the middle class. Like the idea was like it was the bourgeois that like and kind of like educated, like more educated people, not like kind of like a populist from the bottom thing. That's all kind of like a red herring. But just to say that like a lot of people would like kind of associate like the communism we've seen with Marx, and that's not really all that accurate. But like Marx actually wrote a lot more about just like a lot more about just like these paths of what like capitalism would lead us to if we went like basically like concentration of the means of production, that he was like very right about, and is like even if you hate communism, that's the way he's been applied. Like it's very interesting to read what he wrote because he ended up being like very predictive and correct. Um, but that is all to say that like a lot of these ideas, like We 1984, they're all kind of derived from the Marx path and extensions of that capitalism path that are generally like all of those Orwell, like I believe Zamatin was the name of the We writer. Yes, all of them are kind of like derivatives of Marx's ideas. And a lot of Marx's ideas came from like people before him.
Mhm.
Um, so yeah, these kinds of things like build on each other. But yes, to your point, like 1980, all of these books, Brave New World, a lot of them came from these like the extensions of these Marxist ideas, and it's very easy to do that because like by the time these people started writing these books, they saw his ideas become more and more right. So it's just kind of like continuing to you might say predict on that line that he very clearly stated.
Yeah, we got to spin off that future. And I'll get us a little bit back on track here to end this meeting. If anybody has any questions before we go, comment them. But I wanted to see if you could actually guess, unless you don't want to because we don't have a lot of time, the top 5 stock exchanges in the world, if you know what they are.
Okay, let's see. Are we talking about in like are do you, is this like market cap? Are we talking about trades?
Market cap, yep.
Okay, so I think what is it? It's the Hang Seng, the Chinese one. Yes. All right. So I think we got to go the Hang Seng, probably like the Nikkei, at the U.S. Like obviously, I don't know if that's just one. So we got those three. It sounds like I got one wrong already. Um, then whatever the Korean one is, like what is the Korean? I would guess maybe not. Well, we'll just go with the Kospi, and then I feel like it's got to be like whatever the Brazilian index is. How close was I? Those are my 5.
You got the locations decent, but I'll just tell you the order right now. Not exactly correct. So the NYSE is first, 25 trillion. Then the Nasdaq, 21.7 trillion. Then the third biggest is the Euro next at 7.2 trillion.
Oh.
The Shanghai index, which is China, the biggest one in China, 6.7 trillion. And then the Japan exchange, 5.9 trillion is the
That's
fifth biggest.
Nikkei, right? I got that one right?
It says Japan exchange, but it might be Nikkei
I think.
in different terminology.
All right, so I got it mostly right. I didn't separate the U.S. ones.
That whole setup was just to basically ask, do you see the U.S. maintaining that dominance in the future?
Yeah. I mean, I think that it's just like if with the caveat, like if China became more friendly to innovation, then they could overtake. But like, and that's not to say like there's complicated currency questions, but like the US is the largest, friendliest to innovation place. And it's really just, I think it's really just that simple. That it's just like, yeah, there's no wonder it's the NYSE and the NASDAQ. They both have their footprints. Like actually, if I'm gonna say something that might be controversial, might not, I would say maybe the NASDAQ would overtake the New York Stock Exchange someday. Maybe that's like my most controversial, not so controversial view. But like, yes, I would say until there's more I would say until there's more innovation in China, that's not going to change. All right, I think I have dog responsibilities, so I'm getting out of here.
All right, everybody, we're going to be here early on Wednesday, so we'll see everybody then.
All right,
bye, George. Hope your dog feels better.